Hello everyone, this is Sara Rana and welcome to Sustainability 101. In today's show, we look at the contribution of accounting in the fight against global warming, climate change, and other environmental and social issues. Whereas many stakeholders demand accounting companies to perform their environmental and social obligations. The stakeholders that we'll be taking into account today include the media, the general public, and community groups. Today I'm joined by 4 guests from Save the Ledger Monkeys, which is a pressure group that demands accounting companies perform their environmental and social obligations. My first guest is Mr. Maxwell, who has campaigned tirelessly for the promotion of environmental performance. Welcome, Mr. Maxwell.
Thank you, Sarah. Pleasure to be here.
Thank you very much for being here, Maxwell. Could you kindly explain to us why is it so important for the public to demand environmental and social performance from companies?
That's an excellent question, Sarah. Well, climate change is the most pressing issue affecting our whole planet right now. It has been described as the most defining human development issue of our generation. You see, climate change issues are ongoing and continuous. They pose a serious threat to the achievement of our MDGs as they have the potential to reverse years of developmental gains. Tackling climate change is therefore a need for justice. As of today, developing countries have endured 98% of the severe damages thereof, with 99% of deaths from weather-related diseases, along with 90% of the total economic damage occurring in these same regions. Climate change or poverty must be combated concurrently. 75% of the world's poor still live in rural areas and largely depend on natural resources for their livelihoods as well as their income. They suffer the most from natural disasters caused by climate change. The question then is, why companies? Why demand companies to be the ones leading the fight? It is because companies are responsible for most of the environmental degradation. EPA statistics reveal that 60% of the environmental degradation was in fact a result of commercial activity from these companies. Therefore, companies must take responsibility for their actions. Now, the problem at hand is that there are no standards governing the disclosure of socio-environmental performance. This provides impetus for companies to blatantly lie about performing certain activities in order to convey a perception that they carried out activities which are environmentally friendly. Now we are saying enough is enough. Away with the paper tigers. It's time for real action.
I agree, Mr. Maxwell. Thank you very much. Up next, we ask the question, what should be addressed in any proposed accounting standard for the reporting of social and environmental activities? To answer this question, I am joined by Ms. Chu and Jia today.
Thank you, Sarah. The trend towards greater transparency and accountability in public reporting and communication is reflected in the progress toward more comprehensive disclosure of the corporate performance to include the environmental, social, and economic dimensions of the entity's activity. Reporting on any one or more of these 3 elements is referred to the triple bottom line. This trend is being largely driven by the stakeholders who are increasingly demand information on the approach and performance of the company in managing the environment and the social or community impact of their activities, and often a broader perspectives of their economic impact. The TBL report has little relevance to the reporting companies or its stakeholders if it's not aligned to the company's overall business strategy. A decision to move to the full TBL reporting should not be taken lightly. It must have senior management endorsement and commitment, as it may have the major resource implications, and a half-hearted approach is likely to be worse than not adopting it at all.
Up next, we have Dr. Emily Chen with us, who has worked extensively in researching the best accounting trends in relation to triple bottom line. Ms. Emily Chen, based on your research findings, what are some of the problems businesses face in implementing such an approach?
Okay, well, the challenges associated with TBL reporting vary from company to company depending on their various industry sectors, locations, sizes, etc. However, in order to eventually adopt a fixed accounting standard for sustainability reporting, we must first look at a few main issues that companies must address. Companies need to gain an awareness of the relevant issues associated with TBL reporting. They have to obtain an understanding of the requirements of the stakeholders in relation to the public reporting. They have to achieve clarity in relation to the company's objectives and the risks related to reporting, and as well determine key indicators of environmental, social, and economic performance and basis of measurements for their reporting. The Global Reporting Initiative, launched in 1997, addresses a lot of these issues, with its main goal of developing a globally accepted framework for sustainability reporting. The GRI aims to enhance transparency, comparability, and clarity in public reporting of social and environmental activities. It also established guidelines and key indicators of appropriate TBL reporting. They focus on activities of companies relating to their economic, environmental, and social impacts, as well as their labor practices, their human rights responses, and as well as their product responsibility.
That was very enlightening. To conclude, we have Dr. Hong Wei, who has dedicated his entire life to fight for the rights of minority groups around Southeast Asia. Tell me something, Dr. Hong Wei. What are the most significant benefits that accrue from reporting social and environmental issues?
Thank you, Sarah. The business case for TBL reporting on improved relationship with key stakeholders, such as employee, customer, investor, and the shareholders. Some of the advantages that company will enjoy from using the TBL approach include: firstly, it can enhancement of the reputation and brand. Secondly, a social license to operate, as well as attraction and the retention of high caliber employees. Thirdly, it can improve access to investor and reduce risk profile. Furthermore, it can result in cost savings. Last but not least, it can increase scope for innovation. The public, on the other hand, stand to benefit from this approach through improved organizational transparency, where the public will know exactly what the company has been up to. The public will also know about the environmental impact of the product they buy, material used and recycled. If the company are polluting their water supply, damaging their air quality, and whether the company has replenished the community resource that they diminished.
Thank you very much, Dr. Hong Wei. Our experts have highlighted how the general public is being affected by issues such as climate change and how big companies are mainly responsible for environmental degradation and its effects on the public. Again, the concept of triple bottom line was introduced and how this approach fulfills the demands of stakeholders as well as companies report their environmental and social activities. Also discussed were the implications of this approach and the problems businesses face in actually implementing it. Ultimately, the public must be assured of the credibility of a company's socioeconomic disclosures. So this was it for this week from our experts and the pressing issues of the corporate world. We'll see you next week. Till then, take care and stay cool.